Morning everybody, it's Chris here from Serene Education with the 4 majors notes update for the 23rd of May 2011. Just going to be looking at the CTC and our Euro to start with. Let's have a look at the daily. Now, I've put in the major trend line, the most important support and resistance line, which is right at the level it's currently trading at the moment now at 1450 or 14500. You'll notice that there's prior resistance back here in March. Again, at the prior resistance becomes a new support at the end of March, and then we've seen the uptrend, and then we've seen price pull back to this point during the middle of this month, and a retest again after a failure to break and trade higher above the previous swing to the downside here at 14,3500. We're now testing the 14, as I mentioned, the 14,500 mark, and I've done a fib retracement or projection, apologies, from this high. We've seen a major move to the downside, and obviously a consolidation. Now obviously we could see if it breaks and closes lower than this candle here that we saw on the 16th of the 5th of this month, the low at 14,052, close lower than that, then obviously it's trading below the prior support and resistance line, quite a strong one over here that we've seen in the past, and it's trading below that, and then we're obviously going to be seeing these particular for projection lines being possible targets. Now there's one to look at, the 100%. We always look at the 100% extension on a fib projection line, and the 100% is going to take us well below the 200 period moving average on a daily chart, which is very, very bearish, but most importantly below a trend on a massive scale, i.e. the huge outlook on this. So you can see that we saw one in June last year, and then we've seen a bounce over here. So this 1, 2, that could be the next 100 here extension on a long term. So if we see a break below that, then obviously we're getting obviously a lower swing from that one on the major scale, and if that's the case, then obviously we're seeing that occurring on a massive scale in terms of trend direction, and which is very, very negative. And the possible targets along the way would obviously be these 38.400, the 50% at 13,900, 61.8 at 13,800, and these all around prior support and resistance lines, because fibs are worked on support and resistance lines in the past, and you see the 100% takes you way back here to a very strong prior resistance support, lots of resistance support around the 13,4500 mark, which is well bang in target with the trend line. So could be interesting. We're seeing if price fails to find support at this level here during the course of this week, and a retest and a break higher than that, then we're definitely seeing a lot of bearishness creeping in. CTC, however, is still blue, but I can guarantee you that if we don't see any support, we don't see Euro finally supporting against US dollar soon, we could definitely see price possibly testing these lower time frames for sure. So as it look intraday, then 1405 is going to be our major support that we need to be aware of, so we've got to factor that in. So if I can find on there we go. So you can see prices now, momentum is quite great to start with, but as we got to this level here, you can see the momentum, the charts are getting smaller, well, the candles are getting smaller and smaller to this. So ideally we want to see price trading on the opposite end of this level. Don't trade until we see a confirmation breakout and close lower. Ideally on a larger time frame, look at your 30-minute candle close, etc. like that, to give you a confirmation of a strong one. Because all that happens if you don't do that is if we go back to when prior tests in May of this year, you can see there are a lot of wicks here. We don't want to be faked in. Ideally you want to see a close below. Because listen here guys, if momentum is great and we see a break of a strong support and resistance line prior, and we see a break of that and it's very strong, and I can guarantee you the remainder of the people getting into that trade will obviously be pushing more and more momentum to the downside, and all we're doing is we're capitalizing on that momentum shift, and that's what we want. So if we're giving 30 pips, or if we're giving a 30 candle to the market, and that 30 candle's got 30, 40 pips in it, then so be it, because then the momentum is going to get into that. It's going to be so great because we've broken a major support resistance. It's just going to cause a flood of momentum to occur, And all we want to do as traders is obviously we want to be trading that momentum. And if all the large traders out there get a clear indication that there's a very bearish setup in euro and euro is looking very bearish, then obviously all it's going to do is just going to start that snowball effect. So that's all we want to do. So have that in mind. Don't try the euro until we see a break of that, a clear break below the 1405 mark. Otherwise we could see a bounce. And we don't want to be trading, we don't want to get caught into a bounce. So just factor that in. So looking at our smaller time frames, just put that in. So we know, there we go, bang. That is the level we need to see price trading through, and we'll wait. Got to wait. Patience is key when trading. Whether you're trading Forex, futures, commodities, etc. You've got to be able to actually bide your time and wait for the perfect execution, and then go for it. So be aware of it. 1405, need to see a break below that in order for us to see a definite further extension to the downside for euro US dollar. Otherwise what you can see is consolidation, then we'll probably see a bounce to the upside. So, and if there's a bounce, then obviously we want to see if there's a possible trade to that. But as it stands now, euro is very negative. You don't want to be trading against the trend. So let's look for those shorting opportunities to present themselves. Okay, the next pair we're looking at is sterling against US dollar. And I'm just going to zoom out on this one just to see the major trend on this. Let's have a look. Bang, bang, bang. Yep. Okay, cool. So that is pretty much what's the major trend for this. If I can get a decent trend line, you can see that the major trend on this is to the upside, and we've had some hesitations along the way. So we saw a major support layer around the 3500 mark, and then another one roughly around the 1600 mark. Clear indications of support and resistance along those areas, major ones on a daily, and we're having a one right now where we've seen a bit of consolidation taking place over the last week or so. Very iffy, very indecisive, but some sort of pause around here. And this is all occurring at the underside of a 50-period moving average, which happens to be around the 16300 mark, which in itself is a prior area of support and resistance. Oh, sorry, 162,500. And you can see the 50-period moving average is it, but you'll notice that the wicks are all happening below the 162,500 mark, and in doing so, it's consolidating. It's in a box. It's trading in a box type thing. So why not? Let's box it between 2 points. What we want is obviously you want to see a clear indication of movement. So ideally, if we can see a nice juicy break, if we saw a nice bearish engulfing here, and we saw a juicy engulfing candle to the downside, then obviously it'll have taken out all of this indecision, literally. And then we could look at possibly long-term trend is the 1600 or 1605, thereabouts, because that the overall is the trend to the upside. And the 200-period moving average is also below that. So institutionally it's still very strong because it's trading on the opposite end, but we're in a negative trend to the downside. And the one way to see that is obviously having lower swings. You'll notice that we had a high right up here, for example, and then since then we've had lower swings. We had one there, swing low, we had another swing low here. Now we have another one that's happening right here, where the box is, the top end of this box at roughly the 162,500 mark, because price is failing to break higher than that, and the 50-period moving average and the 20-period are going to be happening, also pushing this lower. So if we see a definite break lower, we're going to see a confirmation trend lower, which is going to be set up for a lower swing than that, and it's telling you the market direction is down. I hope you guys can see that. Trend dictates. And if we're getting lower swings, then we are in a negative trend. If we have higher swings, swing high, swing high, swing high, swing high, swing high, we are in an uptrend. Okay, so don't be looking for longs when you should be looking for shorts. Friday's candle close was very indecisive, doji, open and close, long trading wick during the intraday, but open and close very, very on par, and because of that, very indecisive, because it's trading in a consolidation range, and you notice that momentum is pushing it lower. The swings are lower. The longer it goes sideways, then obviously the better is. We could see confirmation, a change in the events, but we need to see a confirmation. And if we don't get that confirmation trade to the upside, then we're not going to be going, because first of all, we've got a 50 and a 20 period moving average to break above, and a strong prior support, which is now resistance. 1, 2, 3, 4, 5 days of resistance here at 1625. Needs to be trading above that, and it needs a lot of momentum, a lot of good news to see sterling change its ways to the upside. Why? Because we're still trading lower, still below the trend line, and the lower swings are dictating that we should be looking for short. So if that's the case, then we need to see a break and close lower than 1500, and if that's the case, then we could look at the next port of call being the 1600 mark. So on the smaller time frames, let's have a look at the picture. 30-minute chart. You can see we had a higher swing, another one, and you'll notice a high swing, higher swing, high swing, higher swing, and now we've seen. Don't worry about this gap. That's primarily because the news, we weren't able to get the US dollar, sterling against US dollar news over the period of the open on Sunday and effectively 6 a.m. GMT this morning. But you'll notice that the CTC is now red in our favor, and we're trading below the swing, which is a negative signal. So what we should be looking for is ultimately a break lower than that, a nice close lower than that candle here, which you can see we're not testing. Here around the 1618 mark, break below that, then obviously we should be getting signals and looking for further opportunities lower. We've seen a bit of consolidation here, but ultimately way down here, 16115 is the ultimate target on a 30-minute chart. So bide your time, wait for a definite close below 161800 to give you a clear indication of further downside movement for this pair. Next up is the US dollar against Swiss franc, and you'll notice that the US dollar has been gaining strength over the last number of weeks, and then we've seen a slight consolidation. This has happened once while price has actually tested a prior support area in the past, roughly around the 895 mark, and we've seen resistance at this level, and we've seen price pull back, but it hasn't fallen significantly since then. It's actually just pulled back, and then it's actually trading in some sort of consolidation pattern. And what you're seeing now is the pair finding support where there was a previous resistance level. 3 days of it here, and then we're seeing it trading in a consolidation band just around the 0.8. If I can just get under that, it'll be the 0.880 mark, and to be really, it's 0.877 if I'm not mistaken, and very indecisive, very small trading ranges, but nonetheless we've seen it finding support here. Be aware that the pair is still very much negative, and the CTC dictates that. This is very much a lagging indicator, and you can see that for the most part of a long time we've been trading well. Since June of last year we've been trading in a negative trend to the downside and posting lower swings. What we're doing at the moment now, however, is we are testing, or we had a trend resistance test. Now you'll notice that this over here, for example, when it bounced and hit that trend line, it fell away quite significantly. Here, however, we've seen it consolidate. It hasn't been a definite break lower and heading back to the prior swing at 0.8600. We've just seen a sideways, and this is telling you pretty much that the US dollar is finding a bit of strength against its Swiss counterpart. So it'll be interesting to see if we could see the price trading higher and breaking this trend line. Then we could be seeing price retesting where the 50 period moving averages is now at 0.895 at least. And if that's the case, and it can break higher than the 0.895 mark, then obviously we're seeing a change in market sentiment, and we're seeing price trading well above a prior trend line and breaking above, yes, and then obviously we cancel the previous swing to the downside. In doing so, it's cancelled this downtrend, and then we should be looking for potential upside movement. So very interesting to see what happens this week on this particular pair. If we can see a break of the trend and a break and trade higher than 0.895 by the end of Friday, we could be in for long-term strength on the US dollar against the Swiss franc. Notice on a 4-hour, however, that the 200-period moving average is still in play to the downside until such time we see that breaking trade higher than that area I mentioned at 8950, which long term is that level there, so it's got a lot of way to go. So here again, it breaks above 8850, and then we could definitely see that as a potential target on this time frame. So be aware of that, factor that into your trading. So as long as it's trading below 895, then it's still classified as a bearish signal, and we're seeing consolidation in this major downtrend. Trading above 895, then we're looking at possible change of market sentiment and possibly further extensions to the upside for the US dollar against Swiss franc. However, the 200-period moving average in its way as we speak. I did mention, if you look at this on a 4-hour, you can see that consolidation taking place on this time frame. So if I could draw a straight line, it'd be great. Back to the basics again. And I mentioned that there is a strong support and resistance line around the 87700 mark, and there it is. And the longer it finds support at this area, then there's a great opportunity that we're going to see change in market sentiment. If we see this break, this support line here at the 87700 mark breached, then we should only be looking for further downside movement. So budget time, we see price trading above the 200-period moving average going into the latter part of this week, then we should be looking for anything but upside. CTC will then go blue, and then we should be looking for opportunities to the upside. However, CTC is still red, and because we're trading below the institution moving average, then we should still be looking for shorting opportunities. So be aware that 87700 is a support area. Need to see it break and trade lower than that to confirm further downside movement. Failure to do so will obviously confirm that there's bullish sentiment creeping into this, and we should be looking for an opportunity to the upside. Notice on the 30 minutes, the 200-period moving average coming into play. Notice that the trend on this time frame over here, you can see that we come from high, we get lower swings. Be aware of that. Trading, got to be trading above all this. Notice that we also, if I put in that 88700 mark, you can see there's a definite support area in this field here. And as long as it's trading above that, then obviously we could see further extensions higher. However, it's obviously going to be breaking parts or indications, give you a slight indication that it's definitely going to be going to the upside. Until it does that, then we should only be looking for shorts, because we are on a negative trend overall on a bigger time frame for this pair. So the longer the support holds up for the latter part of this week, then obviously it's going to give us a clear indication that we could see further extensions higher. However, be aware, institutionally it's still trading below it. It's got to give us a definite break and trade higher. If it's trading higher than these levels, this prior trend to the downside, then we could be looking for opportunity to the upside. And as I mentioned, then we should be looking for ideally ones to at least the 200-period moving average on the higher trend lines, around about the 88450, 88500 mark in particular, because that's the trend. So break above these levels here on the 30-minute, for example, above 8815 and close stronger, would definitely see the 8845 or 850 mark being tested soon. Last pair of the day is the US dollar against Japanese yen. As I mentioned, the US dollar seems to be gaining a lot of strength. Dollar index does confirm that. You'll notice that we have higher swings on a daily time frame, so we know that after price bounced off the 80 mark, we've seen the US dollar gain a lot of strength against the Japanese yen in his recent weeks, and we're trading higher. Noticeably, as we get closer to a 50-period moving average or a potential resistance level, we've seen indecision creep into this, but momentum is still driving higher. We found price trading above a 20-period moving average, and now it's testing the 8200 mark, which is the 50-period moving average. And if I zoom out, prior resistance support on this time frame, and if you can see price break above that, then obviously then we're looking at the 200-period moving average roughly around the 8253, 52 mark as potential target to the upside. However, CTC is still negative. Remember that this is a lagging indicator, and because of that, you're going to find that the CTC is going to be giving red and blue when trend has already occurred and we've seen an upside movement, because it's looking at the bigger picture, and you can see that overall the CTC is red, and overall US dollar against Japanese yen is negative. We've seen a lot of consolidation for a major part of this particular time frame between November of last year until now, pretty much going sideways, not really going anywhere very quickly, bar the breakout and then the intervention, and then trading back up, failed to capitalize on that, and we're now trading lower again. However, we've seen price consolidate at the 80, and now we're trading higher, and obviously we are testing the 8200 mark, which is a round number, and we need to see it trading above that to get clear indication that we're going to see further upside movement. It is trading above the 20 period moving average. It's great. 50 period is the one that needs to be trading above. Trading above those two will definitely give you an indication that short-term trading, that this is bullish, and the trend is strong, and then we could be looking for long-term targets, i.e. the 200 period moving average and above, because we've been there before to 85.50. Just recently we were there, so there's no reason as to why we can't be trading or testing those levels again if we definitely get a clear break above the 200 or the 82.50 in this case. So be aware that we're still negative. If you go to the 4-hour chart, for example, you can see we are testing the institutional moving average, and you can see that it was acting as a resistance for a long period of time. Notice here, stopped trading in its tracks, even very bullish, bang, straight into that, not having any of it, and we've now traded lower. However, it's kept that momentum and is now retesting it again at 8200. We need to see a breach and close higher than 8200 to give us a clear indication of upside movement. Ideally, if you can bide your time, then trading above the previous high, in this case at 82.15 or 82.200 will definitely be a better signal. And if you're trading above that, then the CTC is in our favor. So we can see that the 4-hour already has given us a clear indication of upside movement, but we've still got to be trading above all this. And it's far better just to bide your time and look for a clear 82 break above the 82.10 to give you further upside movement, because we've got swing highs on this time frame, and even just recently even more momentum to the upside. So clear that in mind. If it breaks below the 81.60, then obviously look at the trend at 81.40 as a potential target, because it hasn't kept those highs. And if it's not below that, then obviously we could see a retest long term of here if it fails to break above here, because this trend will be null and void. And as if a major trend to the upside is broken, or swing highs are broken, and it breaks a previous swing high, then obviously that trend is now broken, and we've seen consolidation. And if we see a lower swing, then we can see that price is reverting to the downside again. That's it for today, guys. Hope you have a fantastic trading day. Make sure that you follow all the rules.